Hey, this is Matt from InvestiQuant. Today is Tuesday, January 12th, 2021. And yesterday the market saw fairly quiet activity throughout the day. The range was a little bit light compared to what we've been seeing recently. Volume was about average. And we ended up just trading within Friday's range the entire session. So we got an early push higher that ended up pulling back and closing around the middle of the range. We closed above the open, so we did form green candlesticks on the session. However, we traded within Friday's range the entire session. So what I figured we would look at this morning is that type of price action where you get a green candlestick that is an inside day in a similar market environment, and let's see what that has led to historically with a similar opening location. So let me go ahead and set that up here in Discover using all four instruments. The setup is based upon entering the market long at 9:30 a.m. Eastern Time. That is the open of regular trading hours. The exit is set to the end of regular trading hours, which is 4:15 p.m. Eastern Time. Now for the opening filters, we are currently trading up and still within yesterday's inside days range. So I'm clicking gap up there and then equals next to open and prior day range. I am recording this before the open, so who knows if something will change by the time we actually open, but currently that's where we are trading and where it appears we're likely to open as of now. So next, I'm going to go into the price patterns library, and here's where I can build out the inside day and the green candlestick that we had. So to add the inside day, I can come over to the active today section. And if I look at the candlestick section, we've got two candlesticks that are in play for today. We have an inverted hammer and an inside day. So I'm going to click inside day. And that just means that the high of yesterday was less than the high of the prior day, and the low of yesterday was greater than the low of the prior session. And then I'm going to go into the location last close, and I'm going to say that the last session's close was above the opening print for that session, so that's the top option here. That adds both of those price patterns to the study, and now I can go into indicators, put us in a similar market environment, which is a very strong market. We are above a 10, we are above a 200-day simple moving average, and next click view results. And here we go. These are the results of going long at the open, 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when the prior session is an inside day in a green daily candlestick, taking place above a 10 and a 200-day simple moving average, followed by opening above the prior close, but below the prior day high. So historically, this pattern has just happened 24 times in the S&P dating back to 2003, so not a huge sample size there for the S&P. Same there for the NASDAQ, 24 samples, 22 in the Dow, 28 in the Russell. Very similar sample sizes across all four. And if we look at the win rates on them, there is nothing really to note here. S&P dead even, NASDAQ dead even at 50-50. YM a little bit weak, 41%. Russell a little stronger at 61%. But if you average all these out, we are right at 50% across the board here on the win rate. If we look at the average win to average loss, the average win is larger in the S&P. It is larger in the NASDAQ. The Dow is very similar in size for average win to average loss, and then the average loss is larger for the Russell, which is the one with a few more wins there. But looking at this is very mixed. There is not a whole lot to glean from this other than maybe this is a day that you wait for another setup to develop. You know, maybe look at an opening range type of trade, an opening range breakout or something like that a little bit later in the session. But as far as a daily bias here based on this pattern, not really seeing anything here this morning to be excited about with this pattern. So hopefully you found this helpful. Good luck today, and we will see you next time.